Good day, you're watching Business World Live. I'm Danie, Laurel.
And I'm Delos Santos. Here are today's top stories. With the peso touching the 59 per dollar level in intraday trading, economists say it is not unlikely for the local currency to depreciate further to 60 to 65 pesos. The peso's continued weakness sends local stocks deeper into the bear market territory.
President Bongbong Marcos vows to attend to the needs of investors as he declares that the Philippines is, quote, now open for business.
The government plans to borrow up to 200 billion pesos from domestic creditors in October.
And the Philippines improves in the ranking of global digital competitiveness. We begin our broadcast with economists not ruling out the possibility that the peso may sink further to the 60 to 65 level against the US dollar. That is after the local currency breached the 59 to a dollar level for the first time in intraday trading on Wednesday, September 28. Now, at the end of the trading day, the peso pared some losses to close at 58.98. That's a centavo stronger than its previous all-time low of 58.99. RCBC Chief Economist Mike Ricafort said that given the current forex trends, the peso may continue to lose ground.
You do think that we will likely hit 60 or 65?
It's within striking distance, so to speak. But of course, it's a function and based on the dynamics in the global currency markets. But that's how the momentum looks like.
Now, another economist, Jonathan Ravelas, also believes that it is not far-fetched for the peso to dip below 60.
Sinasabi ni Representative Salceda, most likely yung 65 to 68 could eventually materialize. But ako, in the near term, which is probably between now and year-end, we could probably hit 6180 or 6190 before we eventually get to see some adjustment.
Now, the peso's continued weakness sent local stocks into bear market territory on September 28th. The benchmark index sank by more than 2% to close at the 5,800 level. Ravela said investors have capitulated as they can no longer stand the uncertainty as to when inflation and interest rates will peak.
President Bongbong Marcos says the Philippines is now open for business and is ready for investments. The president made the pronouncement as he led the grand opening of Clark International Airport's new terminal building. In his speech, the president said that the opening of the new building is a strong signal of the country's openness for investments.
Now, we have another facility, we have another airport kung saan makapasok ang mga turista, ang mga travelers. So it's not only the business, the business travelers, napakalaking bagay at napakalaking tulong para sa pag-ahon ng ating ekonomiya.
President Marcos Jr. also said that this was a message he had emphasized during his trip to New York, where he vowed to attend to the needs of businessmen in a bid to win over new investments.
We met with many businessmen, na mga CEO, heads of corporations, and the idea was to tell them we are willing to change in terms of documentation, procedure, even structure, even legislation, to encourage you to come into the Philippines.
The president's declaration that the Philippines is now open for business comes after he had a high-level meeting with the country's top business leaders during his U.S. visit. To find out what went on in that talk, we have George Barcelon, president of the Philippine Chamber of Commerce and Industry. George, good day. Thank you for joining us today. First, give us a quick rundown. What did you guys talk about in that high-level meeting with the president?
As was stated earlier, President BBM has emphasized that our country is very much open for investments. And in the various breakout sessions, wherein the cabinet secretaries were there with him, each one of them has expressed the area of concern that might affect the decision of the investors. And I think the general feeling of those who attended was quite positive. There were breakout sessions that I attended, two. One was regarding the IT infrastructure, and the other one was regarding the BPO,
Okay.
wherein key players were all there.
Sir, you also met, of course, with the U.S. investors, potential investors. That is, you have big funds from KKR to some investors in Alibaba in attendance. Were there any real commitments made, and what were the concerns that were raised by these investors?
Well, they are not new investors, no? Like I met the president of Coca-Cola, Philippine, no? And they are quite bullish about the country. They have projected in the vicinity of about 30 billion pesos investment in the next 5 years. At the same time, I spoke with an American executive that is in the mineral processing. They are very interested in looking into processing of nickel, as what I think the DTI has been espousing, that we get more value added if we process the minerals. And on the side of the BPOs, business processing outsourcing, most of them are quite positive. Again, really having the having the criteria that we have young populations and proficient in English, and we're going up the value chain. No? It's not just voice-related BPOs, but also knowledge-based BPOs.
Now, also, you have the president pretty much touting our return to private-public partnerships. Were there any potential PPP projects that were discussed or opened up during the meeting, or even outside that meeting? Would you know how much this return to PPPs is actually drumming up interest from the private sector?
Well, there were no exact figures mentioned, but some of the key sectors that's needed for more of these investments to come in is the availability of connectivity, meaning to say broadband, if they're made more available throughout the country, we can spread investments. And also, it's easier to find the quality agents because as of now, most of them are concentrated in the major cities. So that's one, if we have more connectivity. And the other issues that was touched on is power. Power is also just as critical, not only for in the industry sector, but also for the big data centers. They require big megawatts and also quality power.
Sir, the president also mentioned that he's willing to revisit legislation if that means that would encourage investors to come in. Anything you feel that might be looked into, whether it is ownership of foreign ownership limits here in the country?
Well, the president did touch on that we are now more open by the fact that of our tax reform. Some of the laws that were passed in the previous administration, such as the Public Service Act, the retail trade liberalization. And having said that, from his statement that our country is very willing to tweak our investment laws, to attract more investment. We have the SIPP that's under the TTI or POI, and I would think that would be the basis for some investors who would like to come, and if their investment is part of the priority project, then they would be given more flexible incentives for them.
Sir, in terms of the timing, is the peso's weakness, which we've been seeing now, and of course dollar strength, hindering these investments for the time being, or is this something that they're not necessarily concerned about due to the fundamental strength of the economy?
Well, from the statements of our economic leaders, it's clearly stated that our macroeconomic fundamentals are strong. The recent devaluation of our currency is more of the external factor, wherein the U.S. has been increasing rates to contain the increased inflation. And that as it may, we still have strong remittances from our OFW. The BPO sector is still very healthy. They're projecting a 10% increase every year. So that somehow offset the devaluation of our currency. But of course, it will not cover our total import dependency on foreign currency, dollar for our fuel, for our food and everything. So there has to be a balancing act in a way that we have to shadow what the Federal Reserve is doing in the States. But if you notice, the 75 basis point that has been increased in the US, here we're sort of monitoring it and calibrating it to a lower increase of interest rates. And I think that's good because high interest rates is like a taximeter, no? Tuloy-tuloy yan. I mean, you're being charged, no? And that might suffocate our rebound after coming from the COVID pandemic. At the same time, the exchange rate has, because of the peso depreciating, all service and food and products costs will ultimately be passed on to the consumer.
But at the same time, there are, of course, some sectors expected to be winners from here, like what you mentioned earlier, again, remittances. But at the same time, you yourself, you're a member of the export sector. How are you expecting this to at least fare when it comes to your numbers?
Well, as the export per se, of course, that's a plus side because you get more peso for the dollar. But for those that are highly dependent on the raw material imported, it sort of negate that plus of the devaluation. One of the concerns really on the macro level is the possible recession in US and also in Europe. That having said that, our export will somehow be curtailed in a way.
Okay, so watching out for that, indeed, whether the benefits of a weaker peso for the export sector might be eroded by the softer demand over in the U.S. Thank you so much for those updates. That was, of course, George Barcelon, PCCI President.
My pleasure, Danie and Chester. Thank you.
Now let's pause for a quick break, but coming right up after that. The country's outsourcing sector targets to boost its double its annual revenues by the year 2028.
More of that and other stories when Businessworld Live returns. Stay with us.
And you're still watching Business World Live here on One News. I'm Delos Santos.
And I'm Danie, Laurel.
The House of Representatives approved on third and final reading the 5.268 trillion peso national budget for 2023. This comes after the President certified the bill as urgent. The lower house voted 289-3 with no abstention to approve the General Appropriations Bill. The three who voted against the 2023 national budget proposal were members of the Makabayan bloc. They explained that for them, the proposed budget failed to prioritize more important government programs.
Lubhang kulang din ang inilaang pondo para sa COVID-19 response. Taliwas sa sinasabi ng kasalukuyang administrasyon na papalakasin ang monitoring and surveillance capacity ng ating healthcare system. Tinitipid ang serbisyong pangkalusugan at iba pang basic social services dahil inuna ang pagbayad sa utang na ipinamana ng nakaraang administrasyon. Pinalobo pa ang lump sum funds gaya ng SIPSIP, pork sa forma ng confidential and intelligence funds at programadong pondo para sa notorious Task Force LCAC.
Now, the Senate has ratified the bicameral committee report on the SIM card registration bill. Now, according to Senator Grace Poe, both members of Congress agreed to drop the word card from the title of the bill. This is to clarify that the bill not only covers physical SIM cards but also electronic SIMs. Lawmakers also agreed to adopt the Senate's framework for registration. Now, under the Senate's proposal, SIM registrations would have to be made directly under public telecommunications entities. This is to rid small-time sellers of the burden of handling personal information as they may not have the proper training to do so.
The Treasury Bureau is planning to borrow 200 billion pesos locally in October. The Bureau will try to raise up to 60 billion pesos through weekly auctions for Treasury bills starting October 3rd. Meanwhile, it has also 4 scheduled T-bond offerings to generate the remaining 140 billion pesos for its borrowing plan. The government raised 88.58 billion pesos from domestic borrowings this month. That's on top of an additional 10 billion pesos raised in a T-bond auction last September 13. The country's outsourcing industry remains bullish in its growth despite dimming global outlook. According to IT and Business Process Association President Japhet, the industry expects to grow annually by 8% in the next 6 years. The sector aims to generate as much as $59 billion in revenues and create another 1.1 million jobs by 2028. By the same year, Madrid also says the industry sees its contribution to GDP to increase to 8.5% from its 7.5% share in 2021.
The Philippines improved 2 spots in a global digital competitiveness index. In the IMD Business School's World Digital Competitiveness Ranking 2022, the Philippines ranked 56th out of 63 countries. But it also lagged behind the rest of Southeast Asia, including Indonesia, Thailand, Malaysia, and Singapore. Denmark was the top performer globally with a score of 100. The World Competitiveness Center explained this ranking describes the importance of national factors in explaining the digital transformation of companies and adoption of digital practices. Each economy is ranked according to 3 factors, that is knowledge, technology, and future readiness.
An improvement, but still a long way to go. And those are
56.
56. Those are the biggest stories on the economic and corporate front today. I'm Delos Santos.
And I'm Danie, Laurel. We are One News, all sides, all the time. But don't go away. We'll give you the latest on the local bourse when Business World Live returns. Stay with us. Welcome back to Business World Live. Now, it was the dreaded breakdown of the 6,000 support level yesterday, but are there any bright spots to this bear market? To give us fresh insights, we have with us Japhet Tantiangco of Philstocks. Good morning, Japhet. Now, bear market yesterday, we seem to be bouncing back. Okay, not
quite.
Again, not quite. It's been pretty shaky the first 30 minutes of trade. But tell us, what does this tell you? The breaking of this 6,000 psychological level. Is there a chance that bargain hunters will swoop in and that will hold, or are we bracing for a lower support level this time?
Well, based on our outlook for the market, we are seeing a bearish bias moving forward. And this is because, first and foremost, the market has already entered bear market territory, so below the 6,041 bear market line. And at the same time, as you've mentioned, it has breached below the support range of 6,000 to 6,100. Right now, we are seeing a technical bounce from the local bourse, supported by the positive spillovers from Wall Street. However, over the medium term, as mentioned, we're still seeing a bearish bias due to a confluence of headwinds. Of course, first and foremost, you still have the peso's depreciation, which may likely continue given the hawkish outlook of the Federal Reserve, plus the possible further ballooning of our balance of payment deficit. And then you have, of course, the peso's depreciation alone already has negative implications in the economy, from higher import costs to bloating of our dollar-denominated debts. And then you have food inflation risk due to the impact of the recent typhoon. And of course, we are also dealing with the recession worries abroad. So we just have a lot of a lot of headwinds right now, which is causing the market to which is giving this bearish outlook for the market. As for support levels, the next one that we see, which the market could touch, is 5,700.
Okay, Japhet, like taking a look at my charts here now, is it time to be swooping in, especially since it does seem to have already been oversold? And is this all sentiment driven? To what extent have markets already digested the hawkishness of the Fed? Why is there still so much uncertainty when it's pretty clear already that the Fed has released their statements? Why is there still so much cause for concern?
I believe the uncertainty lies as to how much the Federal Reserve is going to go, or up to how high they're going to raise their policy rates. I think that's where the uncertainties lie. If the Federal Reserve will, if the Federal Reserve will continue, for the near term, they still have a very hawkish stance. But the question is, up to next year, is this still going to be the stance of the Federal Reserve? If so, then we could expect more downward pressure on the local currency, which I have mentioned a while ago has negative implications on the local economy. Now, as to, of course, if the Federal Reserve is going to continue on with their hawkish stance, then, of course, which puts downside risk on the peso, which in turn has an upside risk on inflation, then there's this big possibility that the BSP will also continue on raising policy rates. And if it rates policy rates too, then there's the possibility that it could slow down our economic growth. So I believe that's what investors are contending with right now. As to bargain hunting, well, if you're going to look at the market, it's price to earnings wise, it's already undervalued. It's trading at a PE ratio of around 15.30 to 15.40 times. So this is way below its 5-year average of about 20 times. So it's really undervalued. So yes, we could do accumulation, but my advice is let's be cautious. If you want to make the most out of it, better watch out for buying signals. And I can offer two. First is if the market touches and confirms its support level at 5,700. If it is able to hold that ground, then yes, we can accumulate. Another signal is if the market is able to get back above its previous support range, which is 6,000 to 6,100. If so, if it is able to do so, then yes, that's another signal for us to accumulate. But again, let's be cautious. Now's not the time to be aggressive, given that the market, as we've seen, is still in still in bear territory.
Okay, not the best moment to be aggressive. At least two very clear signals here from Japhet. But let's be more specific here. Which sectors do you feel will bear most of the brunt here, will be suffering the most? Are there any particular bargains that we're looking at?
Well, for sectors, the best, well, first, let's go with the best. The best sectors that we see right now are the banks. Given the hawkish outlook of the Bangko Sentral ng Pilipinas, of course, we expect rates to rise further, and this is going to benefit the banks. It's going to increase their going to increase their interest incomes as well as their net interest margin. So, of course, this in turn could translate to better profits for the banking sector. So that's the sector that we're really looking into right now. Add the fact that a lot of them are at bargain levels. So yeah. Now, for the sector that could bear the brunt of the current environment, well, first, with the rising inflation, the consumer sector is expected to take a hit. So the consumer staples. So we should be cautious with that. With the rising policy rates or with the rising interest rates, another sector that's going to take a hit is going to be the property sector. Of course, with rising rates, you have rising mortgage rates, and of course, this could dampen demand for the property space, especially for the residentials. So be careful with the property sector, especially the ones which are heavily exposed to residential assets.
Okay, we know that you said earlier not the time to actually be aggressive. It's a moment for us to all be cautious. The question now is, where do we put our money, or should we be looking into bonds this time around?
Well, for that, if you're going to manage your portfolio, of course, save some space for stocks. Bonds are also a good option right now, especially the long-term ones, since those on the long part of the curve, or long-term, those with the long-term tenor. So they already have yields going above 7%. So those are also a good option. And finally, still preserve some for liquidity. So maintain some liquidity. Right now, we can say that cash is king, given the ongoing scenario given the ongoing economic challenges.
All right, cash is king.
Cash is
Just
king.
if the inflation, of course, doesn't erode the value of our cash. So thank
Time
you
to
so
manage
much
this basket.
for that advice. That was, of course, Japhet Tantiangco from Philstocks.
You're welcome.
And that's it for today, September 29, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us on Signal Play. Register for your free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jess Delos Santos.
And I'm Danie, Laurel. Stay safe, Philippines. We are One News, all sides, all the time.